All right, welcome back, all you Rain King members, and also welcome to all of you that are not Rain King members, but looking at this general market video to get a sense of how we approach the markets. All right, the presentation is by Rain King LLC for educational purposes. Lots to cover today. We're going to go over the indices, bonds, Bitcoin, and tech. Then we'll look at some of the leading stocks and what the watch lists are looking like. We'll wrap up and I'll give you a little bit more information about the BlueSky7 virtual event. And before we launch into that, I did speak last Saturday at the IBD's national meetup. So I've posted the link here for you to grab. I'm actually the first talk in the series. There were 4 speakers, I believe. I was the first one. I talked about the general market and the big picture secular, bull secular super cycle. So you might want to check that out. And it was last Saturday. All right, let's start as we normally do with the indices. All right, here's the S&P today on a daily chart. Currently we're about 3% below the peak with some of the damage that we took on Thursday. Thursday was a distribution day in the market. The day before that was a stalling day. So you can see the volume picking up. If we look at the new highs and new lows in the lower panel, you can see the reds are the new lows. They're starting to pick up a little bit. So we got to really keep an eye on that. We don't want that to get too excessive. It's very similar to where we were back in early September, where you can see that the market came in for a couple of bad days and new lows picked up, but then the market righted itself. It had a couple of inside days and then we moved higher. So we don't know how this is going to play out. Now we are 2 weeks in front of the election. And about 2 weeks ago, I shared some information of how the markets act before the elections, presidential elections. So we're going to talk about that in a little bit more detail. But the S&P has come back down to the red line, which is the 50-day moving average. All right, switching now to the NASDAQ on a daily chart. When on Tuesday, this day here looked pretty decent. It was an accumulation day. You can see the volume finally picked up. We had blue volume bigger than we've had in a long time as we tried to get into new high ground. It looked encouraging, but then as you noticed, Wednesday, particularly Thursday, got kind of ugly, really with Microsoft and Meta's earnings reaction really weighing down the index, and some of that tech was cascaded into some of the other tech names and creating a day of convincing selling. But you'll notice here a subtlety, that is, we didn't really have a distribution day on the NASDAQ yesterday. It was close, but we saw one on the S&P and we didn't see one on the NASDAQ. So maybe is that the sign that things are slowly turning with the NASDAQ gaining some relative strength? We'll have to see how that plays out. You'll notice that we have got net new lows for 2 days on the NASDAQ. So that's not great. We don't want to be in that condition very long. So we have to watch the market really carefully here the next few days. Today was an inside day. All right, coming back to the presidential elections, this was a slide we used on October 18th for Rain King members. We talked about the 2012 election and how exactly 2 weeks before that election, we had about an 8% sell-off. 2016, the S&P 2 weeks before the election sold off 4.4%. And then in 2020, the S&P was trying to come back from this correction we had in early September 2020. We were rallying near highs, and then we washed down almost 9% in a 2-week window before the 2020 election. So those last 3 elections, there was definitely a downward bias to 2 weeks in advance. So if we come back to the S&P daily chart, I've just put these levels kind of on the current chart. If the elections is 2 weeks before the election started right here, a 4% correction brings us down into this area, and a 6% correction brings us down to the almost the lows what we had back in September. 8% would be pretty bad. We'd be getting down to the 200-day moving average. So that would really call things into question if we had that big of a correction. But we don't know how it's going to play out. If I go back to that chart, what is encouraging is that after the election uncertainty was removed, you can see here that we bounced back very quickly. Quick snapback, very quick snapback in 2016. And even in 2020, we had a very quick snapback as the uncertainty of the election resolves itself, and big institutional traders start placing their bets on how they think the winner of the election is going to govern, and finding the right sector. So it could be a shakeout that's going to play out. This election, I think, is from everywhere you read and see, it's going to be very, very close. And it's not likely that we're going to know on November 5th who is the winner. It might be a lot of recounts, could be some challenges legally. It could be, who knows, could be a week or so before we know who the next president might be. All right, let's talk briefly about bonds, Bitcoin, and tech. So here is the JNK, which is a high yield bond ETF. So I've taken JNK and I've divided it by IEI, which is government bonds with, I think, 3 to 7 year maturities. So just trying to show that in the last, this is a weekly chart, but since August, September, and October, we've actually been getting some rally in the junk bonds. High yield junk bonds are actually outperforming, which is a good sign, because we all know, if you've been watching bonds, the long end of the curve has been steadily rising in interest rates. So this is just I put this in the deck only because if the economy was really in trouble and there was a lot of credit risk, you wouldn't see high yield junk bonds hanging in there as they are. So maybe things are going to change after the election, after the Fed meeting. So it's just something to keep an eye on. Now let's turn to Bitcoin. This is a chart from Macro Charts. Pretty interesting. This is looking at 2012 to the current, and it's looking at Bitcoin. And you'll notice that Bitcoin has a tendency after the elections to have strong rallies. In 2012, it rallied for almost the next year. You can see here in 2016, after a long base, rallied very, very strong up until December of 2017. And then even after the 2020 election, we rallied very strong for about a year in Bitcoin. And we currently have been really basing almost all of the year here. And now, if this were the consistent type of seasonality, we'd expect some sort of burst higher in Bitcoin. So this is looking at it closer on a daily chart. We had the run up in 2023, and then pretty much we've been in a 7-month consolidation here in 2024. Long base, but you've noticed that the last month or so, Bitcoin has really picked up and it's challenging its old highs. So a breakout here, looking at that seasonal kind of chart, could foretell a big run in Bitcoin. It's possible. Some would say that this positive action in Bitcoin and a breakout is actually anticipating a Trump win. I don't want to get ahead of ourselves. We don't know who's going to win the election, but that's what people are kind of saying on the street. But we'll have to see. Now turning to the NASDAQ 100, the QQQs. We've been struggling really at the 500 psychological level. You can see that's where really the market got turned away in July and went through this long corrective period. And even though we've tried to break out once, 2, 3 times, so far the 500 psychological level has been a lid on the Qs trying to break out. And you can notice that the RS line versus the S&P 500 index has generally been flat. We really want to see this at some point, really try to turn up and start showing that tech could lead a new rally. So we'll have to keep our eye on it. We got kind of rejected again this week at this level with some of the tech earnings from Meta and Microsoft. All right, so I've just called up the NVIDIA chart. This is a daily chart, and everybody keeps their eye on this one because it's such a bellwether for tech. So, it's built the right side of a base. It broke out, probably sucked in a bunch of people here saying, hey, this is the breakout. It's going to go again. And you can see it's just chopped around. It's really been a very weak breakout. You can see here, if we look at the volume, it's really weak. Not much volume at all. We were talking about this in the membership about how this could lead to a shakeout. And it looks like this week we've started to see that shakeout where maybe NVIDIA comes back down harsh somewhere in this level here, and we get a V recovery. Maybe that coincides with the election when it gets resolved. But we could get a shake here, get a shake. Most of these weak people will be forced to probably sell, and then we recover the pivot and maybe we get the real breakout. I do think that if technology is important, because if we're going to get a rally into year end, we're going to need technology most likely to participate. So keeping our eye on NVIDIA is probably a good idea. All right, let's turn now to the leading stocks and some watch list ideas. All right, I wanted to just come back to the breakout chart. This is the chart as of October 3rd, and we're just showing the follow-through day that we had in August, and then we've mapped, over the next 13 weeks here, all the big leading stocks that started to break out and come out. We know TMLs come out, 25% of them typically before the follow-through day, and we had a number of them before the follow-through day. And the big leaders come out those first 13 weeks post follow-through day. And all the ones in green are actually young IPOs. These are new merchandise. I call them the young guns. And these green ones are some stocks you should keep your eye on because they're fresh. They're fresh names. They're new. They're IPOs in the last 2 to 3 years. And they usually have some winners in this group in the bull legs. So a lot of names here. If you're not familiar with them, check them out. So in terms of some ideas, I think some of the real big leading stocks right now, I think GEV, Axon, Palantir, even though Palantir had a little bit of a hit on earnings, is still holding its 20-day. AppLovin. I think there's a second tier group of leaders here, which I've shown. And I also think there's some potential emerging leaders, either just breaking out of bases or they are setting up in bases, but showing good accumulation and have good earnings and sales. The ones in the light blue on the list, those are ones that I currently have a position in. Currently, GEV is my largest position. Now, the question is, we're in a very tricky environment, a week before a major event with the election and with the Fed. We don't know what's going to happen there. So it's really interesting to say, should we be buying on weakness or buying on strength? I would tend to be looking at weakness. Buying on strength now seems to be a little bit dangerous if we get this wash down next week, like we typically have seen before elections. I mean, volatility has been edging up, so you want to be very careful about being too exposed to a couple of big events next week. The other way to look at it is just stay where you are and wait for the dust to settle, wait for the results of the election, and wait for things to kind of settle out. It is possible that I think we might get one more real shake into the election, but we have to be open to maybe not. So just try to stay on toes, watch your overall exposure. There were some decent stocks. A number of these stocks here are young guns that are fresh merchandise. Reddit had a really good earnings report. Cart is new merchandise. So there's a bunch of good names here to take a look at for your watch list. Now, looking at some of these leading stocks, I've called up weekly charts to give ourselves some perspective, particularly after we had a tough day yesterday. Yesterday you might have gotten stopped out. Maybe you took some losses, and it's easy to get into a negative frame of mind, but we want to keep it in perspective. What are the big leading stocks actually doing? So I've called up Axon. You can see here, since this base, this has been acting really, really well. We've got 5 to 6 weeks up in a row, which is a real sign of accumulation with some good volume. So Axon's acting well, even though it came back today and this week. As I mentioned, GEV is up 8 weeks in a row. Very, very strong for an institutional quality stock. And it's got earnings behind them. I picked all 4 of these because earnings are in the rear view mirror. Earnings have just happened, so we don't have to worry about earnings gap ups and gaps down. Palantir reported this week. It had a little small gap down on earnings, but it did get support at the 20-day moving average, which is a good sign that institutions are probably in there supporting the stock. You can see the big blue volume spikes on the way up. Still looks very, very constructive and healthy. Then we have Reddit. As I mentioned, Reddit had a massive power earnings gap this week on the largest weekly volume since the IPO. So this is just showing that the report, which blew out earnings and sales, is showing that Wall Street really didn't have a handle on this company's story, and they're all scrambling to change their spreadsheets and projections for this company going forward. So hopefully that can lead to a sustained uptrend. And you'll notice 8 weeks up in a row this week for Reddit. That is really good volume. So it looks pretty good so far, but we don't want to get in front of our skis. Now, here's a couple of leading stocks, but I've shown here, these have earnings in the front window. So these are very tricky. They're probably not stocks you want to enter next week because of earnings. And if you own these stocks, you got to be very careful how you're going to handle these into earnings. If you have enough cushion to hold through earnings, or you're going to sell it and buy it back later, or put together some sort of way to hedge. Clear Secure U has been acting very, very well. Strong volume profile here. Look at the blue spikes. Really powerful stuff. Earnings, though, are next week on 11/7. Now, Glaukos, this is a company that makes some innovative eye implants. Interesting product that's gaining market share and getting approval in various countries. So it's in a little base here, and it's trying to break out, forming a little handle right now. But again, earnings are next week, so it's hard to get in this one. Rain King members, we found an earlier entry earlier in the week, but we're not sure if we have enough cushion to hold yet. Next one is CCJ. This is the nuclear power theme as it relates to AI data centers. This is a big stage one cup with handle forming, but again, we've got earnings up next week, so it's one to keep an eye on. Maybe we get a gap up. I imagine the guidance is going to be more important than the actual earnings for the past quarter, given the dynamics of nuclear power right now with AI infrastructure. IBIT, this one is interesting because you don't have any earnings risk. It's an ETF. It tried to break through this downtrend line this week on big volume, and it kind of closed mid-range, but it broke out. Again, this is kind of the play, or one way to play the Bitcoin move if we see a big move breaking out in Bitcoin after the election. So you might want to keep this one on your watch list. I currently have positions in U and CCJ. Okay, here's two more, but they have earnings in front of them. This is AppLovin, which has been very, very powerful. Look at that incredibly nice move. Great action, but it's extended. It's extended, and it has earnings next week on November 6th. So you got to handle with care. And then we have Rubrik. I put this on people's radar a couple of weeks ago. It was an IPO forming a base, and we looked at some really interesting action in the base. So this is a young gun that broke out a couple of weeks ago, and then it's gone 3 weeks tight, and then it's moved out of that and moved up this week and closed up, even though the market had a nasty day on Wednesday and Thursday. So that's encouraging, and I have a position currently in Rubrik. But again, this one is interesting that earnings are way down the road. They're not until December 31st. Not sure why they're so far out, but that's what it is. So there's time to stock and get into this stock and not have to worry about earnings. All right, let's wrap up. So where are we? Well, we're off our highs here. Volatility is picking up, as we mentioned before the election and the Fed meeting. So it's going to be an important week. Could be a crazy week. We'll see. Now, the 20-day moving average, which we look at, we are now below the 20-day in the NASDAQ and the S&P. So that's really a caution sign to kind of slow down if you're doing a lot of buying. Today was an inside day on both of those. So maybe the market is trying to stabilize and not following through to the downside, but it could go either way. So we just want to slow down when we start to see the 20-day get broken. New highs and new lows. We set some new lows. We're kind of starting to pick up a little bit. So we've got to watch this one very, very carefully over the next week or so and see what it tells us. Leading stocks, I think the best leaders are still acting pretty well. As I mentioned, there's certainly earning bombs out there. So you got to watch your average cost really carefully, and you have to anticipate, what are you going to do? Can you actually handle an earnings drop down of 10, 15, 20%? Try to think it through when the market is closed and give yourself a realistic shot of a game plan. If you should sell the stock before earnings, or if you have the stomach to try and hold the stock through an earnings move. So be prepared for the downside. If you happen to get a nice earnings gap up, that's just some icing on the cake. Exposure levels, I've decreased these a bit to about 60 to 70% 8% exposure, which is lower than we were about a week or two ago. I still think it's wise to stalk and look into the leaders to try and control your risk and find a way to the leaders, maybe on some weakness and pullbacks. It's far better than trying to buy breakouts in second and third tier names that are maybe showing only mediocre relative strength. We've hit this a couple times. Be aware of when your company is going to report its earnings. Could get bumpy the next 1 to 2 weeks. You may even consider banking a number of smaller gainers just to give yourself a little bit of buffer in the overall portfolio in case we see some washdown and a shakeout. All right, our quote of the week is from Bruce Kovner, hedge fund manager. Now, Bruce was actually in the very first Market Wizards book. His quote is, "If you personalize losses, you can't trade." It's so true. You're going to take a lot of losses in your trading career. You can't take it personally. You can't take the market as personally being against you. It's just part of the odds of trading. If you can have a nice risk reward and maintain your numbers, losses should just roll off your back as part of the business and just keep them as small as possible. Now, speaking of Market Wizards, I wanted to bring your attention to BlueSky7. This is going to happen a week from tomorrow, November the 9th. And speaking of Market Wizards, we're going to have Jack Schwager, who's written the entire Wizard book series, with us. We're going to do an interesting interview with him and actually look at a couple of his personal trades. And we have Jason Shapiro, who is in the Unknown Market Wizards book. He's with the Crowded Market Report. He's a contrarian investor. He'll be with us as well. And Katie Stockton is a technical analysis person that really has been on top of her game, and you'll see her on CNBC from time to time. Myself and Mike Kincaid are going to be giving a presentation on a model book stocks from 2020 to 2021. And we have some really interesting data to share on green flag stocks that go up 20% or more in 3 weeks. And so we've dug deep into that data, and we'll be sharing a few of the insights at Blue Sky. Amy Smith, who's with IBD for a long time, she's going to be with us co-hosting some of the interviews. And Jason Thompson will be with us as well. He's going to help co-host the event. He's with tickermonkey.com, and he was my partner when we developed the earnings gap workshop, which has been a big success. So here's the actual agenda for Blue Sky. We're starting at 10 a.m. Eastern time. You can see the sequence of the talks. Late in the day, we do something called Power Picks, and each of our speakers gives a 2-minute pitch on what stock they think is actionable and set up pretty well. So it's a great event. It's a virtual event. It's going to be recorded. But what's really important, and people ask me this all the time, you must register for the event to get the recordings link to view them. And the recordings will be available for 30 days after the event for you to watch as many times as you want. But you got to register. Now, seating is limited for this event, so don't wait. Get yourself registered. Here is the link that you can register for the event. Like I said, it's next Saturday, November the 9th. You don't want to miss it. And if you want to, you can go to my X. My X feed has the link posted and pinned to the top of my profile. So if you want this link, you can go there as well. And if you have a question about the event, just email me at rainkingbullbear@gmail.com. We'd like to see everybody come to Blue Sky. There's a tremendous day of learning and education. And I think with Jack Schwager and Jason Shapiro, we got some really great information to share. Now, those of you that are not Rain King members, and you should check out our website. We have a lot of information. If you get a membership at the Rain King membership level, I do a weekly video. I give you focus list setups, actionable setups with the trade logic, entry pivots, stop losses, sizing of positions, etc. So it's a video that comes out every Monday or Tuesday with very specific setups if you're interested. Recently, we've had some nice winners. GEV up 47% in 35 days. You can see Coherent has been a winner. Core Scientific, 19% in only 15 days, and some others. So if you want to get involved, take a look at the website. We have 3 membership levels. Okay, everybody, that is the general market update for November 1st, 2024. Thanks, everybody, and have an awesome weekend.